Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for January 12th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now we're basically stuck at these highs. 1, 2, 3, 4, 5, 6, 7 days just trading basically between 57 and 77. So it's a 20 handle range over the last X amount of days. Very, very narrow. Typically implies expansion ahead. One thing I've mentioned before is that this market is lacking follow through at the moment, and so it's easier to just kind of stay away, let it play out, because right now it's not really doing much of anything. I mentioned before 57s is a key fulcrum. Price pushed below it a couple of times yesterday, and both times late bears were trapped and price subsequently pushed higher. It's going to take a much bigger push in order to run those stops downward. Until then, whenever you have a very narrow range, you could see price test both sides of the range here before full-on expansion occurs. And keep in mind, we're still in an uptrending market, and so the forces are still pushing this thing to the upside. So you got to be very, very cautious and careful if you're trying to sell into this strength, because you have to watch for signs of rejection. Otherwise, it's safest to stay away at the moment. Here's a look at the intraday time frame. On an intraday basis here, one thing that was important about yesterday was price traded mainly within the third standard deviation of VWAP on both sides of it. When price dropped down into 57.5, the key level, you can see an absorption signature formed there, and price bounced back to value. It happened again down here, and price bounced back to value and to the third standard deviation. Wide-ranging trading range day, and now we're starting to see weakness right back down. Again, this is the range. 55 up to about 72 is the short-term range right now. And playing and fading the edges is likely the best option. So if price were to get down here, you can see low volume node. That would be an opportunity to fade it back to value. If price were to get up here to 72, it would be another opportunity to fade it back toward value. Outside of that plan right there, it could be very, very choppy and difficult to get into this until we see expansion. So again, proceed with caution. Now taking a look here at, let's look at crude oil. Here's crude oil, continues to trend higher right now in the intraday time frame. And if you look at this on a higher time frame basis here, price challenged recent support here. And I've been mentioning 51.67 to 52 is very, very important there. Very, very important key level. And you can see each time price has been below there recently, it's been a quick push back up. So right now, it's clear crude oil is not moving anywhere right now. It's not going to go down. It's not going to go straight up. It's in the range. It's 55 right now, down to about 50, and that's the trading range. If you put a micro composite profile on this right here, you're going to see almost a D-shaped profile with a couple of little HVNs there. So it's basically just chopping around the middle here, and that's, again, very difficult to engage on a swing basis at the moment, and you have to be very clear about direction on an intraday basis as well. Right now, given the rejection below 51.67, the implication would be a push back toward the previous close and the top of the range. But again, once you get closer to the center of this range here, call it 53s, it's very choppy. It's above and below, above and below. So you have to be very cautious right now. Again, another market here that's stuck in the range, but is building energy for expansion. So something to watch out for. All right, here's a look at the intraday time frame for crude oil right now. Yesterday, price pushed below that 51.67, traded below it, and instead formed a box reversal and broke back above. That shows you the importance of 51.67, and even the market tried to hold below that zone. It failed. Bears failed to get paid, and that sparked a push back above 51.67s, and now you're seeing a recovery back up. One level to watch here is 52.11. This price returns into this zone. That's an area where bulls have been defending. That could offer another area. And even into the LVN in that 51.67 to 51.80 zone could offer an opportunity to bounce it. Other than that, right now, again, in the higher time frame, we're kind of stuck in a larger range, so we could see a lot of back and fill in crude. All right, let's see gold here. Here's gold. This is the higher time frame. We reached 1,200 today. We reached 1,200. We got there overnight here. and in pre-market trading, this is something we were very cautious about before because we had such a bearish market. But when price formed this little box here and had this day where price pushed well beyond it, the retest of that zone was very important. And we talked about 45s, we talked about 46.5 being very important, and that was likely going to lead to a push into 1180. So that move came to fruition. Once that occurred, the expectation was that we would likely see follow through into 1190 and 1200 as long as key levels along the way can be defended, like this 1170, for example, which I mentioned yesterday. So this has continued upward. And what I mentioned before, once you get into 1200 to 1180, you're now in a major thick zone of resistance. This is an area that had been prior support, turned resistance. So this is very important. We're going to see how it plays out. Overall, this thing still continues to push up. You're still seeing a pattern of higher highs and higher lows. And even when there was a failure to get below that low of 1180, as we watched in our trading room, that failure to hold there sparked the move all the way back up, and we nearly reached 1200 yesterday alone. So this is very, very bullish. I expect further strength here. We are holding at highs on an intraday basis, so watch that short-term range, but any pullback still seen as a buying opportunity until proven otherwise. Here's a look at the NQ to finish up. The NQ here has been quite bullish overall. The recent pullback here offered a straight rally opportunity here to begin the year. 1, 2, 3, 4, 5, 6, 7 days straight up. Right now we have an inside day. But the thing that I talked about Monday was, despite the strength that we're seeing, continue to watch 49.94 and 5,003, basically the previous week's close and the previous month's high. That zone right there is very, very important. And right now we're holding just above it. And that's okay. That's okay either way. The idea here is to watch what these participants do. Because you had a straight move up and now everyone's getting long up here. But you're not really seeing new highs in a continuation just yet. So that's what I mean before by bulls can get late long up here, but if they don't get paid, the stops will come out. And so that's the trade opportunity we were talking about earlier in the week. We haven't seen it quite come to fruition. Instead, we've been in a holding pattern between 50-50 and 5,000, a 50-point range over the last 3-4 days. So again, narrow range. We could see expansion. The flow is still to the upside. It's still to the upside. There's going to be, it's going to need to see a key rejection or some sort of stop run day in order to start changing the momentum. Right now, the flow is still to the upside, but I think it's safe to be cautious at this point because, again, if you want to buy, why buy at these highs? Wait for it to pull back, and I think a lot of savvy traders are waiting for that, and we'll see what happens. Now on to the intraday time frame. Here's the intraday time frame. Basically very similar to the ES in the previous session. We had a pretty decent trading range day that kind of eventually played out, and that's still the range to watch. So 50-50 up here, 5,000 and up to about 5,007 down here, and right now we're right at the center of that range. Whenever you're at the center of the range near VPOC, here's 5-day VPOC, 1-day VPOC, it can be a lot of chop. So right now at the moment, safest to fade the edges. We're in the middle, so that could open up an opportunity to defend down below. Perhaps watch for rejection to defend up top. Otherwise, we could be range bound until expansion occurs from this narrow 4-day range. All right, that's it for now. Let's see how it plays out heading into the rest of the session. Good luck and trade well.